A Forex scam is basically a fraudulent scheme that targets people who trade or invest in the foreign exchange, or Forex, market. The Forex market involves global currency trading, and it operates mostly online, which makes it a frequent target for dishonest actors. Scammers use false promises, fake trading platforms, and misleading advertisements to take people's money under the appearance of legitimate investment opportunities. Check the pinned comment to get help from an expert. It's a smart move to work with a cyber expert to resolve your grievances. How Forex scams work. Scammers often begin with aggressive marketing campaigns through websites, emails, or social media. They promise quick, guaranteed profits with minimal risk and claim to use secret strategies or automated systems. Their goal is to create excitement and urgency, so people will deposit funds quickly. Many scams involve fake trading platforms that, honestly, look genuine. Victims deposit money and see fake profits displayed on the website or app. Encouraged by apparent success, they are persuaded to invest more. But when they attempt to withdraw funds, scammers delay, demand extra fees, or just stop responding. Eventually the site vanishes and communication ends, leaving traders with nothing. So, let's talk about some of the most common types of Forex scams out there. Ponzi or pyramid schemes work by using money from new investors to pay earlier ones. This creates, an illusion of steady returns, but the whole thing falls apart when the flow of new deposits stops. Fake brokers are another big problem. These are fraudulent companies that pose as legitimate brokers, often copying the appearance of real ones, but honestly, they're not licensed or regulated at all. Signal seller scams. Well, these are when individuals charge people for so-called expert trading tips or signals, but honestly, most of the time, these signals are just random or completely useless. Trading robots or algorithms are another common trap. Scammers sell these automated systems and promise consistent profits, but in reality, most of them either just don't work or, worse, are actually rigged to lose your money. Investment management scams happen when a supposed expert offers to trade on your behalf. The catch is, after collecting your deposit, they simply disappear, leaving you with nothing. Phishing scams. Yeah, they're a big problem. Fake brokers or traders might reach out and ask for your personal data or login details, and well, they often end up misusing that information later on. There are some clear warning signs to look out for. Promises of high, risk-free returns should definitely raise a red flag. If you feel pressure tactics urging you to make immediate deposits, that's another concern. Watch out for a lack of verifiable company details or regulation. You might also notice difficulties or unexpected fees when trying to make withdrawals. Anonymous teams and vague contact information are suspicious too. And finally, be wary of fake testimonials or reviews that seem just a bit too positive. So, Forex scams, well, they work because they really take advantage of people's greed and, honestly, just a limited understanding of trading. Scammers use all this technical language and set up these really professional-looking websites, which makes everything seem totally legitimate. A lot of folks believe they're actually participating in real market activity, but, in reality, the trades they're seeing are just completely fabricated. Scammers count on this illusion to keep people's trust, at least long enough to collect some pretty large sums of money. The consequences, well, they're pretty serious. Victims not only lose their money, but they also go through a lot of emotional stress, and, the scammers often hide behind international borders and these unregulated systems. These types of scams also end up damaging public confidence in online investing, making people more suspicious of real, genuine opportunities. So, just to sum it up, a Forex scam is basically any fraudulent setup that pretends to offer currency trading opportunities, but instead, just steals your deposits. Usually, this involves promises that are way too good to be true fake trading data, and brokers who aren't even licensed. The key thing here is that investors' funds are never actually traded. They're just taken. Hey, don't forget to check the pinned comment if you need help from an expert. It's always a good idea to work with a cyber expert to resolve your grievances.